Hey guys, Tony here. So I just wanted to answer a quick question that came into my email today regarding copays. A therapist was asking to give a better explanation of the difference between a copay, coinsurance, deductible. And so let's just touch on those three topics for a second. So you know that Medicare Part B, traditional Medicare, has a 20% coinsurance. Now, many patients will have a supplemental, also known as a Medigap policy, that picks up all or most of that 20% coinsurance. But coinsurance refers to a percentage of the allowed amount. So a 20% coinsurance indicates that you might charge $100 for a unit. Medicare might allow $37.25 for that unit. The beneficiary is responsible for 20% coinsurance, meaning 20% of the allowed amount of the $37.25. A copay is a flat dollar amount. Typically, a copay might be $25 a visit, $50 a visit. So a copay is going to be the same, independent of how many units you bill or which units you bill. If you bill less than the total copay, some payers will reduce the copay amount to the allowed amount, but once you pass the copay amount, so for example, if I saw a patient for a single unit of therapeutic exercise, and that one unit allowed amount was $15.23, but the patient's copay was $50, the patient would be responsible for $15.25 or whatever I said. Now on the flip side, if the patient had 6 units and the total allowed amount for all 6 units was $123, but they had a $50 copay, the patient would pay $50. The insurance would pick up the rest of the allowed. So a copay is always a fixed dollar amount. A coinsurance is a percentage of the allowed amount. So that same situation, if I provided 1 unit of Therex at $15.25, and the patient had a 20% coinsurance, they'd pay 20% of $15.25. If the total allowed was $137, they'd pay 20% of $137. The deductible is what the patient is responsible for based on the allowed amount, not based on the bill, up to a certain dollar figure. So like I have an HSA account, family deductible of, I think it's like $11,500, individual deductible of $5,500. So I pay out of pocket the full allowed amount up to the $5,500. Then my HSA kicks in and pays 100% of the allowed amount after that. When I say allowed amount, I mean the whatever the insurance company is allowed, okay? So let's put this into practical purposes. Why would an insurance company, why would one plan have a copay, one plan have a deductible that's high or low, one plan have a coinsurance? It's all about cost sharing. And the cost sharing affects the premium price. So premium is what the beneficiary pays on a monthly basis, whether you use your insurance or not. You know, so a family premium might be $1,179. If that plan, let's say for example, that plan has a $500 deductible and covers 80%, the client pays the remaining 20%, so it's a coinsurance. I might find another plan from the same payer where the monthly premium is $700 instead of $1,100. But what's going to happen is my coinsurance is going to go up, my deductible is going to go up. Maybe I'll have a $5,000 deductible instead of a $500 deductible. It's all about cost sharing. The more cost I, as the customer of the insurance company, is willing to accept up front, the more I'm willing to pay in premiums, the lower my out-of-pocket cost when I need services. And the flip side is true. If I just want like a major catastrophic plan, I want to pay the lowest monthly premium, I'm going to pay the highest amount when I need services. So there is no such thing as a good or bad insurance. Insurance is regulated just like any financial tool. Insurance is a financial asset. It's part of a portfolio. There's too many misconceptions out there around what insurance is. You know, you can't say, well, I have a terrible bank account because there's only $300 in it right now. It's not the bank account's fault. It's you don't have enough money in the bank account. So keeping all of that in mind, just understand coinsurance is a percentage of the allowed amount. Copay is a fixed dollar cost. And then deductible is what the beneficiary has to pay before the insurance kicks in. All of that has to take into account the allowed amount, and that'll be a topic for a new video, because if you're the beneficiary, if you're the person buying insurance, an important part for you to consider is what is the fee schedule for that insurance. You know, as therapists, we hate working with United Healthcare as a payer, because United Healthcare is one of the lowest reimbursing payers on the market for in-network providers. But on the flip side, if I was the patient, if I was the beneficiary, and I could pay a lower premium monthly and have a lower allowed amount because of the negotiated contract that United Healthcare got for me, I'm going to be more inclined to sign up with United Healthcare. So we have to be able to understand both sides of the equation, what you're getting paid as a provider, what you're agreeing to in your contract, because nobody's forcing you to take low reimbursement, and then what the client, the beneficiary, is paying in monthly premiums, out-of-pocket costs, deductibles, coinsurance, all that stuff. Guys, I hope this was helpful. I'm happy to do like a full-on lecture. I've got some old ones, but I can do a new one on basic insurance terminology, how insurance works, you know, what the system is like. If you want something like that, post a comment on YouTube. Take a minute, subscribe to the YouTube channel. Let me know what you guys are looking for right now. In the meantime, I'm gonna get back to work. I'll see you guys on the next video. Thanks for watching.